This is the MTPredictor weekly market update for September 8th. All right, it is the beginning of the football season, American football here in the States. So I know I'll try to be a little more brief perhaps this week. I know a lot of you will be tuning into those games. So let's start with the S&P here, and I apologize for all this markup on the chart here. That's stuff from the smaller time frame that I'm keeping on there for some different reasons. We'll look at one of those in a minute. But here's our S&P again. Our analysis a number of weeks ago is that we were heading into wave 5 here, and that we could anticipate a potential correction in the minimum wave 5 area. We got a decision point sell signal that the software gave automatically. The close of this week's candle, the candle was red. That's telling us the sellers were overcoming the buyers in our resistance area, and so we were anticipating a correction. Again, the software, when I put the analysis on, knows the correction is back to the wave 4 DP. We are in a risk-free trade at this point, so we do want to move the stop down to a break even there at 1680 and a quarter. This is the ES, still the September contract. Will be rolling over this week at the end of the week to the December contracts, so be aware of that. Anyway, stops can be moved to break even or whatever vehicle you're using if you are short these markets, and if you're watching to protect your portfolios that are still built as long as the markets are going north. Watch this level here, this decision point. If this holds as support, then the trend, which was up prior, should continue up. But if this gives way to the downside, then we have to be careful that they're going to wipe out this whole 5-wave pattern up, and we then take a decision point off of the start of wave 1 here, and that would put the S&P down around that 1200 level. If this area gives way, the tendency is we could see that area down here. So, but at this point, let's protect ourselves. This could end up being a potential wave 1. If we get a rally, we'll project up wave 2 here. Again, using the tools and the software. These are the MTPredictor add-ons for Ninja 7, by the way. A little different platform than I've been using the last few weeks. But this is a potential area for a, let me just pull this off so you can see that wave 2 or B here. So this could be an A, B, and heading into C. If this is a significant high, though, we could look at this as a wave 1 heading into wave 2, and it will project wave 3 down if we get into that area. But if you take a stop in here and we don't take out the prior wave 5 here, then again you'd have another opportunity to short if you were looking to do that. And the reason why I'm preferring to move the stop down at this point, again, you don't have to, depending on what your situation is, but when we look at the NQ here, or the NASDAQ, again, the same position here in terms of wave pattern in the minimum wave 5 there, but you can see there has been really not much of any sell-off here in the NQ. It's been holding up very, very well, and so we may end up seeing the typical wave 5 that'll start around 3170. Well, we'll call it 3170 to 75 area there. All right, so this market is holding up, quite well compared to our ES. And then if we look at the Dow here, again, same pattern, very similar to the S&P there. We had our decision point sell signal that also told us that we had divergence between price and our oscillator here. And again, the pattern, same. That wave 5 pattern, the correction again should be back to the wave 4 DP. Our software knows that when we do the analysis here. And there it is. Again, it would be a small control risk with a reward about 3 times the size of your initial risk. And that's all we're trying to accomplish here. So again, you could have your stop move down on the current contract, 15,304. That will roll over beginning on Thursday, so be aware of that. Also, just be aware in a couple weeks, I think on the 16th or 17th, 18th of September. Let's see, starting the 17th, we'll have the FOMC meeting will begin, and then the announcement on interest rates on the 18th. And that week will also be a quadruple witching options expiration. So we're heading into options expiration in a couple weeks, and also a major Fed meeting. It may be the last major Fed meeting that this Fed, the current Fed, Ben Bernanke, has to make any serious policy changes or adjustments and so forth. So that's why a lot of people are going to be looking at this meeting for official word of tapering or not tapering and so forth. So expect it to be a big week. We're heading into these volatile months as we head into September here. Remember, as we've been looking at the VIX, and I had said prior, this area we were looking at here in the VIX, this kind of shaded area, going back when we see the VIX in these levels, we get these spikes of volatility, and certainly we did see that on Friday as well. And you can see how we've come out of this level. Again, this was the area where we don't want to be buying the stock market here. The VIX is inversely correlated to that. And so as the VIX was moving higher, obviously the market was moving lower in terms of our S&P and our Dow. So we've gotten a spike here, a little bit of a pullback last week, but we'll see what we get coming into some volatile months. We've seen these are the months that we've seen crashes and corrections and so forth, and obviously we are correcting now. We'll see if the correction follows through as we're looking on our wave 5 corrections back to the wave 4 DPs. So just be on your toes the next as we get through September into October here. A lot of stuff coming into the picture, and of course add on top of that what's going on in the Middle East with Syria and those decisions that are going to be made, going to have a big impact on all the markets. So all right, let's take a look next at let's look at gold and silver. Okay, let's look at silver here first. I'm going to start on the weekly chart. Again, here was that descending triangle that we saw, this distribution that was happening. We know that this was in the area where Venezuela was repatriating their gold, and then later Germany requesting their gold. And then we had the big drop here that broke the bottom of the triangle there, this trend line support. And a lot of folks short from that, which was a weekly wave 3 down, and we've retraced now. We're in the wave 4. You can see on the chart here, the software has projected the wave 4. We're in that area. We did get a red sellers candle a couple of weeks ago telling us the sellers were overcoming the buyers. We regained some of that last week. Let's just go ahead and project wave 5 down using the tools and the software here, so we can have that again on our chart ahead of time. So this is an area where it's a possible, we'll call it early, maybe early short. So here's our wave 5 targets, minimum and typical wave 5. Let's just look at the risk reward here to the minimum wave 5 target. So about 3 times your initial risk. If you were short that, again, you'd have your stop around 25.18 or so. And the target down around 17.58. So it's possible that this correction could start, but like I said, here's that. What tends to happen when you get a break of a level like this, they tend to retrace and test that level. So we may have a little higher to go here. And I want to see, if you look on the daily chart here, on the daily chart, I'm going to clear all this stuff off here for a second. All right, this TS2 was a wave 4. All right, the software, that's why I gave the signal here, was wave 4. It was anticipating a sell-off into wave 5. All right, just as we anticipate. Okay, it went wave 5 down here. Now typically after 5 waves down, you get a correction, just like we talked about when we're looking at the E-minis, back to the wave 4 DP. So I'm taking my decision point tool off of the wave 4 swing, and there's the wave 4 DP. This is typically the area where after we come down here, we typically eventually find this area here. I like this area because it coincides with that level, that trend line break back here. So we may have another, maybe one last leg up into this area, and then we'll be in that decision point. And again, we call it a decision point because the market needs to make a decision at that point. If this holds as resistance, if we do get up in that holds as resistance, then the trend, which was down prior, should continue down. If they take this out to the upside, all right, then they may erase the whole 5-wave pattern, this 5-wave pattern down here, and we would take our decision point off of the top of the wave 1 there, and that would put us about, just above that $34 level in silver. If okay, so strength on the STF has come off a bit on the daily chart. We did have strength telling us there was more upside ahead, way back here, and of course we did get a nice leg up there. So we'll keep an eye on this one. Again, it's possible this may be an early short. It could go from here, but like I said, I like that little area up in here off the wave 4 DP on the daily chart. Again, if you're in something here, it's a small risk, high reward, so if you lose, you can have another opportunity to reset there. And the other option is we're going to watch that decision point level, because this area here, we could get a short squeeze out of this area to the upside as well. We talked about that before. All right, let's look at gold. All right, here is gold on the weekly chart. Remember our TS2 sell signal. This came into that weekly wave 4. It is shy. Here's that level, that breakout level from that trend line break here. It did unfold as an ABC correction there, and you can see a low risk, high reward setup where the target is about 5 times your initial risk. So you certainly some of our traders could be short that or have some type of position there in whatever form. But if we look at, and that's fine, low risk, high reward, you're not always going to be right. If you are right, that's going to be a very nice trade. But similar to, and again, this was short, we looked at this on the daily chart for gold, and we talked about, you could have your stop to break even at this point. This is a target here, is a very large one, 12.6 times your initial risk. DP off of the last swing low is the target there. So we're going to see how these play out, but protect yourself on the short in case we do reach up into this level here and we get that potential squeeze. So we're going to watch these. So if you short these markets, the other thing to keep in mind now, as we head into the fall here, these are typically or seasonally good months for the metals, because you've got jewelers buying the metals because they're going to be selling a lot of jewelry, they hope, during the holiday seasons that are coming up. So it's seasonally typically a good month for these markets. So if you're short these, just be careful, protect yourself. Again, low risk, high reward, that's the name of the game. All right, let's skip over to oil. All right, here's the weekly chart of oil, and again, we talked about this has been in a very long term consolidation, and we had some movement up here into the $110 level, which we've seen many, look, it's bouncing off 80 to 110, but we did have a little something significant, more significant, that we want to keep an eye on. And this may be ready and loaded depending on what's going on in Syria and so forth, but we did get our first weekly close during this period here above the $110 level. So we poked above there before, but we never closed above 110. We got to close above 110 here now. If they take out the high around 110.70. If they get to 110.71, you've got this little wick here that has to be dealt with. But watch that 110.71 level. If they take that out, maybe that's the start of the run to the $120 level. So here's our next significant high. This last high is the decision point resistance here. I'll just put it on there or re-add it on there. That's where we've been struggling here. Again, it's a decision point. Market needs to make a decision here. If it holds as resistance, it will sell off. We've got a potential where they may take this area out to the upside, and if that close above 110, we could shoot, if we see this last swing into this low here, take a decision point off. That would put us into this level here, that $120 level. All right, so we could see a pop to that $120 level. When we've seen that before, they've really smacked things down, back inside that $110 to $80 range in oil. All right, we'll see. Is this going to be a game changer or not? It really won't be unless we start getting out of the $120 level and we break this decision point to the upside. Then that would definitely be a game changer, because that's a potential break of this whole multi-year kind of consolidation that's been going on there. So watch for that. Quick look at the dollar and the euro. Let's see, where's my DX? All right, again, the major significant low with the high volume spike, telling us professionals are stepping in. Your Jim Rogers and those are stepping in here, buying the dollar. This target on this one at 85.23, we've come close. Haven't quite hit that level yet. We didn't reach the support level, this little decision point support level here on this pullback, and the dollar bounced a little bit off of there, and we've seen some selling in the euro. So we're still kind of bouncing around these levels. We'll see if it can make that last push into this level. This will be a significant level. This was the last swing high into the major low, and so it's an important level. We'll see if we get there. And then we've got other levels back there that we're dealing with. But no real clear pattern here, as it's just been really choppy. But we'll see. And just look at the euro, US dollar here on the weekly chart. Again, we had our 5-wave pattern down here. We anticipated that correction back to the wave 4 DP. Boom, we got that. Now there was a TS4 sell signal there. That did achieve the 100% initial risk line, and those that move the stop to break even would be stopped at this point, and we're kind of getting some consolidation. You do have a little kind of head and shoulder with your head and your left and right shoulders here. There's your neckline. If it does break down here, maybe we do end up seeing that target down there. But your next weekly support, let's just take a DP off here. We'll call that 126.75 at the next weekly resistance, sitting around that 134, 135 we'll call it. So again, these are kind of consolidating a bit. Again, we had a nice big move here with the correction, and then things kind of go sideways. So these markets, again, will probably make a decision after some consolidation, break one way or the other, and then we'll kind of see how that unfolds. But nothing really significant pattern-wise in here. It's just kind of chopping between these levels here. All right, so we'll go ahead and leave it there. We'll pick back up next week. And again, look, Thursday and Friday are big economic data releases this coming week, and then we're heading into a Fed week after that, and options expiration. So markets do like to move higher into options expiration about 70% of the time. It is a quadruple witching, which is really tricky. So we'll see how that goes. Anyway, enjoy the rest of your weekend, enjoy the games, and we'll see you back next week.